investors have to be patient, and they don't want to be patient in a sector sometimes. But Goldcorp's growth was all due to exploration in an area that was thought not to have any potential left.
Rob, I'm always interested in the kind of people that we talk to on the Assay TV. I'm just wondering what your, how did you get into mining yourself? Like, what was the drivers that you as the person got into mining for?
It started with my father. And when I was 10 and 11, he had me charting stocks. He was in the investment business and exposed me to that. And then when I was a teenager, he decided his clients should get into gold, and that would be in the mid-60s. And so he put all of his clients into gold bullion, Canadian and South African gold mining shares when gold was around $35 an ounce. He thought the system was being flooded with money and currencies were being debased. So that was my exposure. And then I spent the first 18 years working in the investment industry, doing research, sales, and portfolio management, largely in the precious metal space. And at one point I said, well, I met a couple of guys and they keep finding deposits. There's more deposits to be found. Let's jump into the mining business. And so I ended up coming in, doing a competing bid on a hostile bidder and ending up buying control of 2 mining companies. I thought I would do the financial architecture and let the guys who know something about mining run it. And after about 4 months, I decided the guys running it weren't doing a good job. And within a year, I stepped in as the CEO of 2 mining companies and remade the management team several times. And that was how Goldcorp began.
Oh, wow, there you go. And then your McEwen Mining, I guess that came later.
It came later. McEwen Mining, I ran Goldcorp built it over 19 years. We went from 50 million to about 8 billion market cap. Our last 13 years, our share price compounded at better than 31% annually. So we had a great run for all our shareholders. I was the largest individual shareholder, non-institutional. So I was happy as well. And I thought, well, let's see if we can do it again. And I started really just buying junior mining companies where I'd buy 10 to 30% of them because I'm a big fan of exploration. And then at one point I said, well, why don't we put a couple of them together? And there was a group, we had property in the United States, in Nevada, just south of Barracks, what was Placer Dome at the time, Cortez Hills Mine. And then we had cash flow coming out of Argentina and thought, well, there's projects that need money and there's cash flow, and so put the 2 together. Unfortunately, the timing was terrible in that this was achieved at the beginning of 2012. So after that, the metal prices fell all the way through to the summer of 2015. But today we have 4 sources of production with various issues. But the goal was to build a company, and the goal remains to build a company that could qualify for the S&P 500. And there's only one gold stock in the S&P 500. And the logic being that 80% of the value of the US public markets are contained in the 500 companies in the S&P index. So when the gold market starts running quickly, there'll be a flood of money coming into those stocks because it's a very highly regarded index. So you want to be in that S&P index as a gold stock because there's only one. Post 9/11, they removed all of the foreign companies from the S&P 500. So it is largely, almost exclusively a U.S. index. And the U.S. at the moment is the largest market for gold shares in the world. So you want to be there. We trade on the New York Stock Exchange and Toronto Stock Exchange, but about 90% of our trade is New York.
Okay, and I'm just curious, like in your estimation, if if you were to go back, if you were to start out today, like in the mining sector, as you did, all those years ago today, COVID pandemic notwithstanding, do you think it's easier or harder or more difficult to kind of get started the way you did?
Circumstances may be different. There's more regulation today, so it's a little hard. It's slower to build a mining company. But I'd say we're still seeing discoveries, and pretty impressive discoveries, in known mining districts where people thought there was no opportunity. I can think where Goldcorp, where we had our success in the Red Lake district of Ontario, Canada, we discovered gold a mile below surface in a mine that was supposed to be closing. It had 3-year life, it was high cost, it had difficult labor history, and we found gold in a setting that was contrary to everyone's belief of where you'd find the gold. And it became one of the richest gold mines in the world. Now, recently, there's a company I made an investment in about a year and a half, 2 years ago, in the Red Lake district, and they've had a phenomenal run. We put money in at $1.50, and it's at over $14 now. And they're finding the majors have gone through there. Placer Dome have been there for a long time. Even Goldcorp been there, and they were finding it on a deposit that they're getting great intercepts. There's another company in the area that was a past producer, and it bounced around for more than 20, 30 years, and it's showing great life right now. You're finding deposits in Northern Europe, in the Scandinavian countries. No, I'd say there's still going to be surprises. There's still deposits to be found. People are coming and just reinterpreting the data. So I'd say that someone coming into the mining industry, we're at a point where the system has been flooded with money, the economies of the world. The case for owning gold is stronger than ever. And there's still more gold to be found, more nickel to be found, more all sorts of minerals. So no, I don't think it's harder.
Okay. And just talking more about COVID-19 pandemic, how has it impacted your business operations, and what have you done to kind of address and maintain business continuity?
All of our sites shut down for a period of time, some in Argentina and Mexico by government mandate, I guess in Canada as well. Out of concern for our employees in the United States, we shut down for a period there. So the first impact was a drop in revenue. Second impact is uncertainty about what we're going to produce this year in terms of how much gold and what will be our cost. So that it introduced an element of uncertainty in our guidance. In terms of protection, I mean, part of our shutdown, we took it early to prevent the spread out of concern for the employees. We now have at our gates, there's sort of facial recognition and a temperature scan, automated. We have some oxygen measuring devices that measure the dissolved oxygen in your blood, because COVID is a respiratory disease that impacts your ability to absorb oxygen. So that's another indicator. Like everybody else, you got to wear a mask, social distancing, and in some cases, it's also trying to get people healthier. In certain areas, some of the miners aren't in the best physical condition, and one of your best defenses is a strong immune system. And being out of shape is not the way to defeat this. So, got a little program. It's not quite boot camp, but it should be.
Well, I think, yeah, a result of all this will be at least a re-examination of all of our healths and at least some sort of focus on kind of hygiene and public health overall. But you know, if we took COVID out of the equation, we talk more about mining investment. I guess I'm curious, like, what does Rob McEwen, the mining investor, look at when he looks to make an investment in a project? You know, if we went back a year, like, what was the kind of normal criteria, things that you look at?
I'll look at how the stock's performed. If someone, say it's a public company, come in and say, where is it? Is it at a high, or has it been neglected in the market? Has it been avoided? Have there been some problems? I'd have to say I'm quite inclined to look at distress situations because that's where I see if there's an opportunity for a turnaround. That's where you're going to get your biggest gains. At least I believe you're going to get your biggest gains. And some of my biggest returns over time have come that way. So to be that, look at how much management owns of the company, and do they own it? Is it beneficial ownership because they have options, or DSUs, RSUs, restricted shares, or I just want to see how committed financially they are and emotionally to do it. Are their actions, do they match their words? Are they saying, oh, we've got a really great prospect, then they turn around and sell their shares? I don't, and then it's geography. Where are they? Are they near a known mining district, or do they have a different interpretation of the district? And try to weigh those. I've tried investing in Africa a couple of times and it hasn't worked very well for me. So right now I'd say my focus is largely North America, bits of South America, and Northern Europe. I'm just comfortable there. Australia's had a great run. There have been some wonderful discoveries down there. But I haven't spent a lot of time there. But it's a rich gold district as well.
Okay, yeah, you just kind of covered sort of my next question in terms of preferred investment destinations and why. So you got to it already. Maybe tell me a little bit about your kind of advocacy and support for the Save Canadian Mining effort. What's your view on it, and why are you kind of involved with it in some way or in some capacity?
Well, the mining industry is an important industry to Canada. It generates a lot of wealth for the communities it's in. Canadian mining personnel have gone around the world. They carry a lot of technology. I think they improve the lives of many people in the communities they go into. And the short selling has become quite a game after they got rid of the uptick rule. So before, you couldn't sell if the stock hadn't ticked up. You couldn't do a short sale, and now it's just wide open. And you have short sellers. A lot of it is not disclosed. So I just think, it's an important industry. It's a fundamental industry for the world. They've been successful suppressing stocks here. They'll do it elsewhere as well. So it's sort of an advanced guard to try to prevent further deterioration of this sector.
Sure. And I guess, if you took kind of the predatory short selling you were just speaking about, is there something that, that what other advice that your views that you believe that Canadian companies need to do to be competitive abroad?
Well, just thinking of the short selling for a moment, I mean, every company should be encouraging its shareholders to register their shares, or at least say to the custodian that's holding their shares that these shares are not available for loan. The ETFs and the index funds are probably the biggest suppliers of shares to the short sellers, because they're looking to earn additional income to offset their operating expenses. And they earn a small amount of funds for lending out their stock, which somewhat harms their performance. But and I look at the short selling, at some point, someone's going to come along with a big discovery or turn it around, and the predatory short selling is going to hurt some of them quite badly, because it'll go the other way. So how do we become more competitive abroad? We have to make more money. People invest in stocks because they believe they're going to go up. And the best way to go up is if you're making money or have a big discovery. And exploration sometimes makes investors have to be patient, and they don't want to be patient in a sector sometimes. But Goldcorp's growth was all due to exploration in an area that was thought not to have any potential left. We have a couple of properties that I'd say fall into the same category. They have a lot of similarities to when I looked at Red Lake. But it takes time, and unfortunately, at some points in the market won't give you time.
Yeah, and is there ways in which the industry can help juniors access capital, like alternative forms of capital, in your mind?
Well, you've seen companies, royalties and streaming companies come out and be a source of capital. I don't think that's helping the industry. It's good to own a royalty or a stream, but if you're a company selling one, I think you're giving away your future and the whole reason why investors would invest in you when you've sold a royalty or a stream on your property. And you can see the divergence in performance. The royalty companies and streaming companies have done very well because they bought the profit margins of the mining companies. What could the other companies do to help the juniors? Industry organizations have lobbied the government to keep flow-through shares or a tax-driven instrument there. That's been a very useful innovation. I think you have to lobby the government and make them understand the contribution mining makes to an economy. Generally, it's about, for every dollar invested, there's a $2 benefit in the economy, whereas surface sector, it's about $1 in and 70-cent benefit. So you get a much better return on your investment there. But I'm not sure, the industry tends to have a lot of independence. I don't think it thinks about helping juniors, other than the big guys. They stop their exploration in downturns in the market, and then they look around for picking up juniors that have done the exploration that they're not able to do at the time. We go through cycles. That's a good question, but maybe some other people have other ways of looking at where that help might come in.
Okay. Yeah, no, I mean, that's an answer I've asked others. I haven't gotten that before on the more government side of things to help support junior mining companies. But you would think that streaming and royalty companies are kind of a new option that's come in the last couple of years or so that is viable.
Oh, I don't view streamers or
Oh,
the royalty companies as a. I think they're a scourge. I think they've destroyed the industry. They hold out the dollar and wave it in front of companies, and they're saying, "Well, we're going to go build. Doesn't matter what part of the cycle we're in. We need the money to build." And from say 2012 through 16, that was really the only source of capital for the industry, particularly juniors, and they gave away their future, most of them. So I'm not opposed to owning a royalty company or a streaming company, but I am opposed to companies selling them.
right. And I think we might have mentioned this before, or just you might have talked about it a bit before, but just talking about commodities, like what's hot for you right now, and what's not in terms of commodities? Like if you were
I have
to
a
be able
really,
to invest.
Brett, I have a really narrow focus. It's been gold, some silver, but gold to me is a monetary metal, and it's money. It's the ultimate form of money. It doesn't have the scale that nickel or copper or iron ore has, or the other base metals. But I've never really looked too far beyond the precious metals. We do in McEwen Mining have a very large copper deposit that's waiting for one day to be developed. It's about 30 billion pounds of copper. So I've learned to like copper,
Mm-hmm.
and I think it's going to be an important element as we electrify the world, for transportation and other purposes, and the urbanization that's going to take place in Southeast Asia. I mean, we've had China grow and Vietnam's growing, but there's a population base there that's bigger than China in those collected countries. And I've seen some estimates that the rate that they are going, if they were to grow at half the rate of China, in 10 years, their economies, collective economy, will be as large as China. And that means a huge amount of urbanization, which will be using lots of metals, but copper will feature very prominently in there. So I'd say I'm hot on copper.
Hot on copper and
Well,
precious metals as always.
yes.
All right, and has COVID done anything to impact that view over the long term, or is it particularly with gold? Actually, with gold and silver, you obviously I would assume that COVID has helped the precious metals.
Well, we've seen countries around the world get their printing presses going at warp speed. Let's call it QE 500. It's on steroids, and no one's really asked. Well, few people have asked the question: how is the government going to pay for all of this money that it's spent out to protect their populations? It's debasing currencies, and we're seeing the broad market respond to all this money coming in, but it's going to need another fix and another injection of capital at some point in the not too distant future to keep it going. It's weakened. COVID's weakened the economy, introduced a level of uncertainty we've never seen before, given governments the right to enact martial law on a very wide scale. Will they be doing away with paper currencies and insist that you must use digital currencies so that you're not passing or having possibly passing the virus on to others. So with digital currencies, do they monitor your bank account? Do they get a better fix on taxation? There are things that are happening out there that it's sort of like a frog in a pot of water that's being brought to a boil. The frog doesn't notice it's happening until the water's boiling and it's too late. COVID has accelerated the reach and the control of governments around the world, all in the guise that it's for our own safety. I think there's another reason. And so owning some precious metals might be a way to safeguard yourself from some of the government actions that are taking place. And the metal stocks, the precious metal stocks are a way of participating in that beyond the physical and usually amplify the movement of the metal.
And copper is also pretty good for its qualities in terms of bacteria and kind of the health perspective for the use of copper, right?
Yep, copper plumbing, great way to stop the transmission of germs.
Yeah.
Copper door handles and all of that, which we've gotten away from. Yes.
Did we used to have those a long time ago in Canada?
Yes, yeah, they were copper pipe.
Okay.
Copper faucets and yes.
Okay. After maybe I was born after that time. Okay.
Me too.
Oh well. Okay. There we go. Rob, that's all questions I had for you today. I just wanted to say thank you for taking the time in Ontario to come in and talk to me while I'm here in Hong Kong. Hope you're keeping healthy and safe, even as we're slowly reopening things in Canada there.
Well, I'd just like to close by saying that I was a large shareholder of Goldcorp, and I'm the largest shareholder of McEwen Mining. I own 20% of the company. I take $1 a year in salary and don't take any options. And the thought was try to build a company. And last year was a disaster of almost biblical proportions. We experienced a fire, then a flood, COVID sort of like a plague. And we've gone in a different direction than the rest of the market. So I think we're turning around. We made some big changes in management. But we're going to have to spend a couple of quarters repairing our reputation in the marketplace.
Okay. Well, we look forward to seeing how that pans out. Perhaps maybe have you come back again in a year or so, just to update us on your plans.
Happy to do so, Brett.
Well, thank you for this, Rob. Take care.
Thank you. Have a great day.
Bye-bye.